Welcome back. Oil prices off more than 8% as news of new COVID lockdowns spread in Shanghai. All of the city's 26 million plus residents will be impacted in two different segments beginning today. China remains the world's biggest oil importer. Let's talk about the drop and what's ahead with Scott Bauer. He's the CEO of Prosper Trading Academy. Scott, good to see you. How significant are these COVID lockdowns in Shanghai, and how long do you expect this to impact the market?
So, first off, let's talk about its significance for hopefully holding the spread of COVID, any worse than it is right now. That is significant. How significant is it for the oil market? In the short run, it does put a ding in the amount that China's going to import. But I think it is very, very short-sighted for people to think that this is going to last a long time or really impact the oil market further than maybe 30 or 60 days down the road. We've been in this situation before. We've seen what has happened before. And every time over the last 12, 18, 24 months, we've seen a shock to the system like this. We have seen some really big moves in the oil space. And I think that traders are looking at this as an opportunity here, an opportunity to fade, if you will, this sell-off that is solely based on the lockdowns. Now, I'm not saying oil can't go down lower here if especially we get some positive news coming out of Russia, Ukraine, which they're meeting today, tomorrow. But in terms of just the lockdowns, I think this sell-off is a bit overdone.
You do believe those lockdowns are solely responsible for the drop we saw?
I think it's a combination, actually, because of that and the news of Russia and Ukraine meeting once again at high level talk. Now, if I had to put a percentage on it, maybe 70 to 75% is because of the lockdowns. Because yes, as you mentioned, China is the biggest importer of crude per day. They use around 15 million barrels per day, of which they import about 10 million barrels per day. But again, I think that it's going to be very, very short-lived. I really do.
Do you expect any change in strategy from OPEC later this month?
Absolutely not. I mean, I'm not in the room with them, but I think they're really loving, enjoying every second of this that they see. I do not expect them to ramp up production at all.
What about the U.S.? Production remains flat there. Do you think that will change, and why hasn't it?
You know what? It hasn't changed because the frackers do not want to get back into the ground. They got burned big time at the beginning of COVID, 18, 24 months ago. And they are honestly, they're beholden to their shareholders. And that is what they are concerned about right now. And the shareholders do not want them absolutely exploring and getting back into the ground. And that's why we have not seen any sort of uptick, if you will, of the frackers over the last 18 or 24 months. So I don't really see that changing.
So it is not, as some are saying, the administration's war on fossil fuels impacting production.
Some will say that, and I do not want to get political about this, but the bottom line is these big corporations do not want to start drilling again. They absolutely don't. At some point, listen, if the price of oil sustains at above $100 a barrel, they may have to. Then they may see a turn of events. Their shareholders may say, you know what, let's start getting back into it. But for right now, they absolutely 100% do not want to.
So let's talk about the price of U.S. gas. Slipped a bit, $4.25, 8 cents off the record from earlier this month. How long do you think gas prices stay that way? And will some of the moves we've seen, Maryland and Georgia suspending the gas tax, California Governor Gavin Newsom has a proposal to have debit cards, $400 per registered car. How will those impact prices and demand, quite frankly?
It's probably not going to impact demand. I don't know that we've seen any impact yet. I mean, people are talking about, gasoline is so expensive, I've got to think of alternate ways to get around. But that has not really come out in any of the statistics yet. The thing that concerns me most is we're coming up to the busiest, demand, the peak demand of the year coming up to summertime here. So if the situation in Russia, Ukraine remains like this, oil prices are going to remain probably 100 plus. And prices at the pump will stay like this and maybe even tick higher. But again, if we start to see, and we all pray that this happens, if we start to see some drawdown of Russian troops and maybe some calming of what's going on there, we could see a pretty precipitous drop at the pump. But just keep in mind, demand's not going away anywhere, at least not here in the U.S.
How high do you think gas prices could go?
If the tensions stay like this, I think we could see $5 a gallon easily in peak demand by Memorial Day. But again, to me, it's not what happens in China. It really is all central around what is happening in Russia, Ukraine.